Now, let's just say somebody's starting off, they want to get into investing in the stock market. How much profit could they expect to make with an initial investment of, let's say, $1,000?
Okay, so let's say that you go to your broker, maybe you're using an app on your phone, you open your account, assuming all that's taken care of, you invest your $1,000. If you put it in an average stock, and by average stock, let's just use that as a proxy of for like an S&P 500 index fund, which represents the whole market and is pretty much the definition of average. So historically, you would earn 10% on your money typically in a given year. Now, it's not going to be every year. Some years are going to be 1% or negative 5% or 30%, as we saw recently. But over long stretches of time, you're going to average about 10%. So that means $1,000. Now I'm simplifying math, of course, but you would earn $100 by the next year in an average year. So that's just something as far as what to expect for an example. If you were to invest in one of these, say, faster growing stocks and not an index fund, if you've chosen wisely, you've done your research, which obviously takes more time, then you could expect maybe higher double digits, 15% plus.
What's an indication that something is a fast growing stock?
Growth in earnings and growth in revenue. And actually, I would look at the revenue first because to me, like that's the heart of the business. You don't have a successful business unless they're making sales. And so you want to see that that top line revenue growth is pretty strong. Now, one nuance I can add to that that I think is helpful is you want good growth, but you don't want it to be too fast. You don't want these companies to like just flame out and fail, which a lot of small companies do. There are some companies out there that are experiencing 80%, 100% growth year over year. Well, mathematically, once you get up to a certain size, that's just not sustainable. You kind of want that sweet spot of maybe higher than 15% growth in their earnings and profits to maybe 25, 30% growth in their profits. That's usually a good range to look at for those fast growing types of stocks.
How many different types of trading styles are there?
Oh man, there's a lot. There's a lot. And but I can differentiate like the main components. There's kind of two main camps, I would say, of investing. You have on one hand long-term investing, which is mainly what we've been talking about. So you're investing for periods of time, probably 5 years or more, preferably 10. This is like you can think of as retirement money or money for longer term goals. That's like long-term investing, and buy and hold investing tends to fall into that camp. On the other side, you have trading. Trading stocks is completely different, but you're using the same instrument. You're still using the same vehicle of the stock market to make money. The benefit of trading is you can make money much faster and you can make money over a short period of time, but it does require more active involvement. So you got to be like checking the market, reading charts. It takes a different skill set for trading, but it has its benefits and it also has its risk as well. You can also lose money very fast trading. And I can like personally attest to that too. So those are the two main camps, and they have different skill sets and achieve different goals, but they both use stocks to make money.